Hey guys, my name is Christian Cicada, and I'm gonna do a two-part series of long-term versus short-term investing. In this video, we're gonna be talking about long-term investing, explain to you guys what exactly it is, the pros and cons of long-term investing, the different methods it consists of, and at the very end, I'm gonna mention to you guys what's the best long-term investment to do right now. And before I start, I want to mention that in my channel, I like to talk about financial independence and investments. And that's something you guys do like. Make sure you subscribe to the channel, hit the notification bell, and smash, devour, eat, tickle the like button. So without further ado, let's get on with the video. So let's just get this out the way right out the gate, because many people have different definitions for what long-term investment is. And it's basically when you hold an investment for more than a year. It's supposed to bring longevity and wealth into your stock portfolio. Many of the greatest investors like Warren Buffett, Charlie Munger have made billions of dollars from long-term investments. It's basically you're putting your money into an investment or into a stock or to a company, and you're gonna be waiting for returns every year. You're not necessarily gonna get high returns every year because the stock market doesn't really work that way. But historically, long-term investors have gained higher returns than short-term investors. So one of the advantages is tax benefits. Usually as a long-term investor, you're gonna get taxed way less than a short-term investor. For example, if you're making less than $40,000 in your portfolio, you're not gonna get taxed. But the moment you make $40,000 or more, you're gonna get taxed 15 to 20%, depending on how much you make. But as a short-term investor, the moment you make $9,700, you're gonna start getting taxed 10%. So let's compare the two. As a short-term investor, if you make $40,000 or more, you're gonna get taxed 22 through 25%. Again, depending on how much you make. So you're gonna get taxed 22% here, 15% here as a long-term investor. 7% is the difference between short-term and long-term investing when it comes to taxes. And 7% may not mean or seem like much to you now, but with years and years of investing, it could really compound to hundreds of thousands of dollars at the end of your investment career. And that 7% could really help you guys be financially stable, financially free, and help you guys retire early just by lowering down your taxes. So when it comes to taxes, long-term investing has the upper edge. And another benefit and another advantage is that long-term investing completely eliminates the human factor of investing. So let's face it, human beings are emotional creatures. Sometimes they make investments or buy or sell stocks depending on how they feel or how angry or how happy they are at that specific time. And as a long-term investor, you're completely eliminating those type of risks and those type of sell-offs, because you have a mindset that I'm gonna buy into this company right now and I'm gonna look at it in 10, 20, 30, 40 years to come at the end of the day. Usually long-term investors don't look at their stock portfolio every day. Short-term investors do. And that's the thing that kind of tricks short-term investors, because they get saddened or get fearful when they start to see their money depreciate 20, 30, 40, 50%. Depending on how the market is. But remember guys, whenever there's a bear market, there's always a bull market that follows. And historically speaking, the market has always come back better than ever. So as a long-term investor, you're gonna see long-term gains instead of short-term fast money change. And the number one reason for me why long-term investment is the greatest strategy of all time is compound interest. Compound interest is probably the most powerful tool when it comes to investments. Tony Robbins wrote a book called Unshakable. He mentioned an example of a man investing $300 a month for 20, 30 years. And at the end of his investment career, his total investment was $28,800. But with compound interest, his portfolio value was $1.8 million. Why? Because he was getting dividends reinvested, and the average return of the market was 6 to 8%. So all of that combined it and compounded to a higher return of his money. So $1.8 million by the time he was, I believe, 55 years old is really good to just retire there, retire 10 years less than the average American, and be financially free at an earlier age than most people. So when there comes advantages, there's also disadvantages. For example, when it comes to long-term investing, you have to really love the company you're investing in. Remember, you're gonna be investing to this specific company or this specific bond or stock or whatever it is for a long period of time. Let's say 2, 3, 5, 20, 50 years. You really have to know and love that specific company. So one of the problems is that you really have to do your research and your due diligence and really understand that company or that business model of that specific company to make sure that company is still around 10, 20, 30, 40 years down the line. You have to make sure your money is valued and is safe in that specific stock or company. And let's face it, many human beings, many people are really lazy. They don't like doing research, so they just buy what's hot right now. And if you're not doing your research, you could really, delude and lose a lot of profit if you're investing to the wrong company at the very wrong time. And speaking of time, that's disadvantage number 2. When you're doing long-term investing, you need a lot of time. That's what they always say. It's always good to start investing earlier than later, okay? Because an 18-year-old will profit more from compound interest and have more value in the portfolio because they have more years of investments. Let's say if they have a full lifespan, they'll have a lot more years of investments, a lot more years of compound interest than a man that wants to start investing at 65 or 70 years old. The 18-year-old will have a lot more time to profit from the long-term gains than the 70-year-old that's trying to profit from the long-term gains. They will need a little bit of time, and if the 70-year-old is trying to do long-term investments, that's not the right strategy for you. You need a lot more time to grow. And when it comes time, you also need patience, okay? Many people try to get rich quick, and long-term investments is not a get rich quick scheme. Again, it's 10, 20, 30 years down the line. If you don't have the patience or the emotional control of yourself, long-term investment is not going to be for you. And as a human being, again, not many people are patient enough to see their money grow. As Warren Buffett once said, his strategies are so simple that many people don't like doing them because they don't like to get rich slowly. Long-term investments has many different methods underneath it. For example, ETFs, high dividend stocks, Roth IRAs, commodities, bonds, ETFs, and it has many, many more. But with all these options, with all these methods, what is the best long-term investment? And in my opinion, for me, it's investing into ETFs or bonds. Why? Because it will bring a lot of protection and diversification into your stock portfolio. It's less risky than investing into a small market cap stock, which has a chance to go bankrupt. An ETF or bond will actually rise up as the market rises up as well. And historically speaking, the market has risen up over time. ETFs or bonds will still be paying you guys dividends, and compound interest will still be in play. And I'm not saying put all your money into ETFs or bonds. It's always good to diversify your portfolio just a little bit and go into stocks as well. But when it comes to investments, long-term investments, ETFs or bonds will be my first choice. So to wrap things up, long-term investments is not for the faint of heart. It's not for the people that are eager to make a quick buck. It's not a get-rich-quick scheme. Long-term investments takes a lot of time and patience. But if you do it right, and you let compound interest do its job, you could be financially free in no time. And as Warren Buffett once said, the greatest holding period is forever. So I hope this video brought you guys a lot of value. Please make sure to subscribe to the channel, hit the like button. Until next time, guys.